Do you know what I see professionals do all the time when it comes to remortgaging? They don't really get it wrong, they just leave it a bit too late. And the thing is, by the time they realise, some of their better options have already gone. For those of you that don't know me, I'm Craig and I've been helping people with mortgages for over 25 years. So if you're new here, welcome to the channel. Now, I know a lot of people watch these videos, which is great, but it does seem that fewer people like or subscribe to the channel. Now, that's completely fine, but if this does turn out to be useful, it genuinely does help the channel to grow when you do like the content and subscribe, so please do consider doing so. Anyway, let's get back to the purpose of the video. Let me explain what I mean by leaving it too late, because this catches out busy professionals more than anybody. What I see a lot is this assumption that remortgaging is something that you deal with near the end of your fixed rate. You wait until it feels relevant, you have a look online at what rates are doing, and then you make a decision and you move on. And honestly, on the surface, that sounds perfectly reasonable, especially if work's busy, life's busy, and the mortgage isn't screaming for attention just yet. The problem with that approach, though, is that remortgaging isn't really about the rate you see on the day that you start looking. It's about what lenders are prepared to offer you at the time when you need it. And those two things, they don't always line up. And this is where people get caught out. Most professionals don't realize just how much timing actually matters. Not because they're careless, but because their income often isn't straightforward. Bonuses change, dividends move, drawings fluctuate. Sometimes it's nothing dramatic at all, but it's just enough to change how a lender views the application. And the thing is, lenders don't really look backwards. They assess you based on where you are when you apply, not how strong things looked last year or how stable they've been historically. So what tends to happen is people wait thinking they're being sensible, only to find that the choice is suddenly narrower than they expected. Fewer lenders willing to help, tighter affordability than they were expecting, less flexibility around term or product, and in some cases, and I see this more often than people think, they drift onto a lender's standard variable rate while they try to sort it out. And that really isn't sensible, especially when you consider the standard rate can be as high as 7 or 8%. Now, it's not because they've done anything reckless, it's just because the window they needed quietly closed while they were busy doing everything else. And that's the bit that really matters. You see, none of this shows up when you're just comparing rates online. Professionals who do tend to get this right aren't doing anything clever or dramatic, they're just starting their conversations earlier. They give themselves breathing space. They look at what lenders will do, not just what they're advertising today, and that then means that if rates move or circumstances change slightly, they are still in control. Now, this isn't about panicking or fixing something years in advance because, well, if your mortgage deal isn't ending for a long time and everything's very straightforward, this probably isn't urgent. But if your fixed rate ends in the next year or so, especially if your income isn't completely vanilla, this is worth thinking about sooner than most people do. I've linked a video on screen that walks through how I'd actually plan a remortgage step by step, particularly for professionals, and it builds really nicely on this, so please do feel free to go take a look. Now, if this has been helpful, feel free to like and subscribe. Not only does it help the channel, it genuinely helps more people to find the channel and they might find it useful. As always, mortgage decisions should be based on advice that's tailored to your own situation, not just hearsay or headlines. Thanks for watching. Take care.